Ladies and gentlemen, welcome back to another lesson from the High Performance Trader. I'm Joshua Salvetti, the YouTuber that collects reliable data and builds profitable day trading strategies based off that data. And today we're going to break down a beautiful trade that we took live on Discord, trading Tesla. A beautiful, beautiful example of our three-step approach. But in this video, I want to dive a little bit more deeper into how I use moving averages to calculate the strength of the trend, to calculate the healthiness of the trend, and to calculate my confidence of getting into the trend. See, a lot of traders struggle with pulling the trigger, making the irrational decision, especially in an emotional moment, right? We got money on the line, we got ego on the line. You know, there's a lot at hand before getting into a trade. See, in this video, I'm going to show you how I use moving averages to guide me, to help me understand, hey, buyers are in control. This trend is healthy. I'm going to show you how to use these principles on larger time frames, right? And we're really going to flesh out how it is we use moving averages and why they're so beneficial, right? So before we go any further, guys, make sure if you like what you see today and you really want to learn more about our strategy, click the first link in my description, and it's going to bring you to this 5-minute document that I have on my website. This breaks down our edge to a T. It's extremely simple, right? It's a very simple 3-step approach. Click that first link below, go through it. It's extremely valuable. And if you guys want free high-level summary data reports sent to your inbox for free weekly, make sure you come down and put your first, last name, email. Make sure you click both these boxes, and I will send you weekly emails, data reports on our strategy. It's extremely beneficial. This is what they look like. See, we've been trading this strategy for the last 8 months. 8 months, and we've collected data on every single one of those trades, right? So right now we're currently sitting at an 82.19% win ratio. That's 146 trades, 120 of them profitable, 26 of them unprofitable, right? That's 82% win ratio. This is how we master execution. See, as a day trader, you have 3 jobs. Number 1 is identify opportunity. You need a way to define opportunity. I'm going to show you how to do that today. Number 2 is master the execution of that strategy. See, you can have all the knowledge in the world, but if you don't know how to execute it, it's literally worthless. And number 3 is manage capital, right? So we're going to cover that today in this video. But guys, get involved. High Performance Trader, extremely valuable resource. Click it, get involved. It just may change your life, right? All right, so let's dive into the lesson. All right, so this is the trade we're talking about. This is Tesla. We took a beautiful setup. 53% ROI on this trade, around $760. I was trading 5 contracts. Josh, how did you know and why did you get into the market where you did? Phenomenal question. So let me pull up Thinkorswim, and before you're going to see the Tesla chart. I have the 5-minute time frame and the 1-hour time frame up, right? So let's do a quick breakdown of the strategy and how we were able to pull the trigger when we did. So number 1 is identify open print. This is the easiest step in the whole world. Number 1, if you're not watching the level that has volume, you're going to be getting chopped around. We can't move the market. The banks do. Therefore, we must spot what the banks are doing. Josh, how do you spot what the banks are doing? Well, you watch the level with the volume. This is called price and volume analysis, okay? So open print always, the 930 bell price always has tremendous amounts of volume. Therefore, we must identify who's taking control of it, right? And number 2, identify the moving average cross. This is the first step. This is the first time moving averages gets introduced to my day trading strategy, okay? Now, why do I bring the moving averages in right here? Because our mind likes to make up things, okay? It likes to assume constantly. Now, it works very well for us sometimes when we're not trading, but when we're trading, assumptions will kill you. They will blow your account. The market has finite ways of tricking you, and making you think it's going to do this when in reality it ends up doing something else. So we need a tool that keeps us grounded, that helps us understand the information that we're actually looking at is true. We need to be able to objectively identify our opportunity. Now, moving averages do all that for you, okay? I like the EMA cloud because when it's red, I go short. When it's green, I go long, right? It's a very, very simple way to identify who has the ball, okay? If it's our job to figure out who's got the ball, the moving averages graphically show us. Okay, so I finally get a moving average cross, and now I need my entry criteria, right? It's a very simple way to identify that the shift in market conditions has happened, okay? It's what we call the RBI or GBI. So you'll notice we got an RBI right here. An RBI is a red bar that gets ignored, right? I did not get in the market long right there. I missed it. That's okay. I watch for the next one, and this is exactly what we get off open print. Red bar ignored. I'm in the market long, targeting high of day, targeting previous day high. So now is where we introduce the 9D EMA, okay? This is the moving average that has changed my life. It's our job to identify a healthy trend, and it's our job to stay away from unhealthy trends. The 9D EMA is my main tool to do this. Now, okay, Josh, what's an unhealthy trend? Well, that's a phenomenal question. Let's talk about it. Well, to talk about that, we have to break down the principle of the moving average. See, principles govern the universe, and they also govern the stock market, right? A principle such as you reap what you sow, that's a principle. Or a principle such as Newton's third law. For every action, there's an equal and opposite reaction, right? The law of polarity. These are principles. Now, the market also has principles. Principles is something that you can expect to happen, okay? The moving average principle is a statistical principle that suggests that over time, the price of an asset will revert back to the moving average, okay? Filling any gaps or extensions between price and the moving average. This principle works across all time frames and is used to identify and become more aware of market behavior, right? Where's the example right here? Notice price gets extended from the 9, and then what happens on the next slide? Price rallies back up into the 9, okay? So once again, the moving average is a graphical presentation, which means it's a line on your chart, that plots the average price of a commodity. So when price gets away from the moving average, that's telling us there's opportunity, okay? Because more often than not, anytime you get a gap, price likes to fill it, right? Market don't like gaps. We all know this. So how can we use this to help us better understand opportunity and to get into the market? That's a phenomenal question. So number one, I'm looking for a healthy trend. Look at the chart on the right-hand side, okay? You see this. This is the 1 hour time frame. You see how extended we are from the moving average. Let's see here. We are, what is this? $8 away from the 9D EMA. So that tells me, Josh, that trend might reverse and go right back up into the moving average. And that's exactly what happened. Okay? So anytime price is extended from the moving average, we can expect price to come back up to it. This is the principle. Okay. So price, we get our 3-step criteria, so we're in the market long. Okay? Anytime my criteria presents itself, I have to get into the market. Okay? So I'm in the market long, and I'm also observing the fact that we're closing back above the 9D EMA. This is extremely bullish, right? Price was just below it, and now price just closed back above it, okay? Buyers are in control. I'm in the market long. Now is when the EMA cloud comes back into the equation and guides us. So what you'll notice here on the EMA cloud, the 5 EMA and the 20 EMA, is that we're heading to the upside. We get a nice push, And at this point in the trade, I am up around $400, around 27%, okay? Then price retraces on me. Now I'm down about $400. My heart's beating, right? I'm going through it. Josh, you were just up 400. Now you're down 400. What are you going to do? Things are getting emotional. Things are getting hot, right? I'm starting to overthink things. Oh my God, what if I lose money on a Friday? Oh no, right? All that irrational savagery that goes through our mind. And then I calm myself and I go, Josh, what's the moving average telling you? First thing I look at is the 1 hour time frame. I go, okay guys, what's the market look like right now? Is it healthy or is it unhealthy, right? So if you look at the 1 hour time frame, which looked exactly like this, there we go. Was I more confident to stay in my trade knowing that the 1 hour time frame was extremely healthy? Absolutely. Was I more confident staying in my trade knowing that the 20 EMA was getting retested and it was aligning perfectly with open print? Absolutely. Did I still have my hard stop in below, what is that, 28456? Absolutely. I'm completely fine with getting out of a losing position, especially on a Friday, right? I don't care. I'm here to follow the process. Price rallies right into open print, and buyers show up with immense strength. Okay? One more thing to point out. Where's the 9 at 28628? Where's price at 285? What happens when you get extended? The moving average principle takes full effect. Boom! Comes right back up to that 9D EMA. So guys, what I really hope you take from this lesson is that understanding the moving averages better is going to give you confidence out the wazoo, but it's also going to help you spot correct opportunity when the times are emotional. We day trade. Day trading is very emotional. We have money on the line, price going up, it's going down. You need a tool that you can lean on. You need a tool that helps you understand that price is either just drawing back or you need to get out of the trade. Okay? This is a tool that will serve you tremendously. I'm Joshua Salvetti. I hope you like this lesson. Make sure you hit a like, subscribe, send it to somebody that needs it. And guys, join the team.